Hey traders, today is Thursday, May 21st, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the Australian dollar. We're poised for a weekly opening range break. We corrected more than 2.8%, nearly 2.8% off of that yearly high. That pullback now coming into initial support at 71.08. You're looking at a basic 38.2 retracement of that advance off the low from March. And the median line for the current operative formation we've been tracking since November of last year. So we're looking for a potential reaction right here after that reversal candle last week took us back below 72. 72 into 72.13 remains critical. We did make a break and a close above that. You saw a raised ceiling there a couple of weeks ago into the start of the month, pull back. That remains critical. That's a 100% extension from the ascent off last year's low. That's a 618 retracement from the decline off the 2021 high. And the objective monthly open is at 72 proper. So any way you slice it, this is still major resistance. The focus now is on the weekly opening range. Here's the daily chart. So the monthly opening range looked like it gave out earlier this week, specifically on Tuesday, with this break dumping right into the median line, right into that 38.2 retracement. You can see for the last 2 days we've been offering support here. If the monthly opening range break is legit, rallies should be limited by 72.13 on the top side being that 100% extension. Drill down even deeper. Here's the 4-hour chart. A near-term pitchfork formation just off the highs, that secondary high from last week, has the lower parallel right there catching the lows yesterday. Here's the rally, and we've got a really clean weekly opening range set right above support. So we're looking for a break of this range for guidance. Near-term resistance, 71.85. That's the range highs for the week. Key resistance, 72 into 72.13. You would need a breach above that level to suggest a more significant low is in place and a larger reversal is underway, or at least a breakout of that near-term downtrend. If we settle a close below 71, that would validate, again, a break of the weekly opening range lows. You'd be looking for a stretch towards 70.55. That's the 50% retracement. More importantly, that 618 comes in right at 70 proper. And that's going to come in at the larger 25% parallel of that multi-month formation we've been tracking. So it's really critical what happens with this real tight weekly opening range near term for guidance here on Aussie dollar. As far as the event risk is concerned, we're pretty light for the remainder of this week. Next week, you do get some of that CPI data. Not only from Australia, but from the US, you get the core personal consumption expenditure, the Fed's preferred inflationary gauge, on yet another update in an environment where we're very hypersensitive to inflation figures. The employment figures have continued to remain really well. Earnings on markets, on equities remain really good as well. So the focus is squarely on the inflationary picture, and we'll get an update on that next week. Don't forget, again, the CME Fed Fund Futures has continued to show that traders are pricing in the potential for one potential rate hike this year. So with that shift, it has been favoring the dollar, but out of the dollar crosses, the Aussie has remained pretty resilient. So we'll be looking near term for a break of that range heading into some key CPI data next week. We'll try to keep you updated as always on MB Forex. Till then, best of luck trading, and we'll see you next week. Cheers.